At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
Let Staples Business Advantage use today's latest innovations plus our team's experience to make furnishing an office space easier for you.
Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
G'day, and welcome back to Shares for Beginners. I'm Phil Muscatello. Investing, finding a better deal, crypto and CDR. There's only one guy who can talk about all of these things, sometimes in the one sentence, Fred Schebesta. G'day, Fred.
How you going, Phil?
Really good, really good. Hope you're enjoying the coffee over there.
Oh, it's incredible. Phil makes a cracker of a coffee.
So Fred's the CEO and co-founder of comparison site Finder. Is that the best description, comparison site?
Yeah, it's fine.
Yep. We've just been chatting about what we're going to chat about today because we didn't really prepare too much about this. So we're going to talk about personal investments and the journey that Fred's on in this. But I just wanted to quickly cover about how the world has changed.
It's a great topic, Phil. We're not talking about just a little change. I think we're talking about a fundamental systemic change. I didn't think I was aware of that until I visually saw it in the city, where there's just, shops being closed down. There's no one there. It's a very unusual place. You go to a restaurant right now and, you have to sit awkwardly and there's less people. And one night we had a guy with a high-vis vest walking around the tables. It doesn't exactly fill you with confidence, and then I think there's an acceptance spot, right? There's a certain point where you get to where now I think I've gotten myself to the place where I have accepted this, and this is just how it is. So from an investing perspective, taking that to, a step further, what does that mean? Well, companies like DocuSign, companies like this video conferencing, instant messaging, they're kind of like, to me, the obvious step ones. I read this piece on Benjamin Graham, pricing and timing. It's all about pricing and timing, right? Mm-hmm. So this one's about timing. I think the trend of offices and, commercial property, I think that's going to take a 20-year, 15, maybe 20 years to reverse. The trend was just up and to the right, and it was getting out of control. The only issue is on the other side is you've got such low interest rates, but then you won't have the same kind of demand. I think what it might open up is with a decrease in property value, it may mean that commercial will turn into residential and people will start to live in the city. I know that sounds completely counterintuitive because everyone wants to, saying, I want to move out of the city, but I just think there are people who will get over it. There'll be a vaccine, and people want to live there. But everyone doesn't want to necessarily go and hang out together because now they've moved out and they're going to virtually interact anyway, and you're working from home. The second part of that is retail. So there's just a beauty in going out and going to a restaurant and dining, and humans are always going to be social. It just is what it is. I think that'll reboot, but retail has learned from this click and collect and buy online. So you want to walk by and get something from somewhere, you're going to go, and I think that's this adaptation. You're going to see, retail, everyone's like, retail's going to, I don't think retail's ever going to die. People need to buy stuff. That's never going to end. It's just the format. And the channel, I think, will be is that stores will convert into places of logistics and distribution where you go there and you pick up stuff because you've already ordered it, but it's very conveniently placed to where you live or the route you go on. And so you choose that location. So they keep the real estate there, but it's more a logistics thing rather than a consumer exploratory thing. You may have pop-up stores as well, like one or two. That's another trend I'm noticing.
You mentioned Benjamin Graham before. He was one of Warren Buffett's lecturers, wasn't he?
Yes.
Yeah, what's some of the stuff that you get from Benjamin Graham's philosophy?
When it comes to, I guess, investing, I didn't really understand. Like, I used to buy. I've always bought stocks ever since I was a kid. My dad gave me some Western Mining Corporation and some, I think it was Westpac shares, and I held on to them for, and then I sold them to Telstra. And I did some Australian investing. Now I invest in the US market. So I buy from both countries, but I never really understood exactly what is my investment strategy. And what I mean by that is I feel I just got lucky. I chose some companies I liked. I held on them for a long period of time. And that's not really an investment strategy, but that's just like buy and hold, which is okay. But it's not like, well, which company now are you going to buy and hold and why and for what term or period, right?
Yeah.
And what I took from Benjamin Graham, so I started that. What's the book? It's The Intelligent Investor. I feel like it's almost like you could take 3 pages and write an entire book about 3 pages and then go again. But there's one part in particular, the classic one is, the stock market's a weighing machine, not a voting machine. Yeah, get that. But the next question I think is, okay, so you found a company that you want to hold on to. In other words, you're up for you think it's something you want to lean into it weighing more in the future. Great. So now what? Do you buy today? When do you exit? So those questions are a little bit more challenging. So what I'm talking about there is timing and pricing. Now, obviously the coronavirus, which is kind of strange, gave us a great opportunity for timing and pricing with the big dip. And so then with the weighing machine, you could choose to go really after that. I don't think we could predict what's happened now where this disconnection of... It's almost like the stock market's disconnected from reality.
From the real economy, isn't it? Yeah.
Totally gone.
But that's to do with central bank support, isn't it?
Totally.
Yeah.
The Fed pumping...
Don't fight the Fed.
Don't fight the Fed. Mm-hmm. And they're buying corporate bonds, which is unheard of. I could imagine they're going to start... If they directly start buying stocks, I could imagine that happen. But it's basically buying corporate bonds is fueling share buybacks. It's sending the whole share price through the roof, right? And then because people are getting money from the government, and they're using that basically to gamble again. Gamble is... Well, I suppose you could...
Speculate.
There we are. Thank you. And that's pumping the prices again. And now you've got these pump and dump groups started up. You've got the whole stonks and Reddit groups and those kind of things. And all of that is great from the perspective of it's fun to do. But the actual impact... So I just give context on this. So I went through and went really, really far down the rabbit hole in about 2017 in the whole cryptocurrency space. And cryptocurrency is a much smaller space than stocks, but it's got that same issues, right? It was unregulated. There were pump and dump groups. People would create coins, list them, pump them in groups, price would fly up, and then they would dump them, and then it would never be a thing, and there was no any technology behind it. It was just literally a white paper and a website.
So pump and dump is when people want to sell something, and so that they pump up the price of it.
Yep.
So that they can take advantage of more naive investors to sell to them as the price is going up.
Right.
Yep.
So the greater fool theory, if you have someone who's a greater fool than you that you can sell it to, then good on you in some way. But I saw that, and it hurt a lot of people, cryptocurrency.
Yeah,
right?
but that happens in stocks as well.
Right.
And it's really happening a lot as well. I'm just saying this just as a warning for listeners that 100%. This is something to watch out on. But I guess I echo your sentiment. I just feel that's what's happening right now. Mm-hmm. Yep.
Like people, and so going back, I think to answer your question, through that experience of cryptocurrency and all those kind of things, and I made some money, I lost some money, through that, but I saw the entire experience of the market play out in a much shorter time frame. And right now, what's happening is I think you've got this extreme exuberance. I think the US market pulled back quite a bit last night, but extreme exuberance upon exuberance upon exuberance fueled by all these kind of things. So from a timing and pricing perspective, you've got a complete disconnection from reality. And then you've got that's a different world that you need to deal with. And eventually that'll stop, and eventually it'll pull back and reconnect. Well, maybe it will, maybe it won't. That's a different question in and of itself. Where is the stock market now a proxy for economic wealth for the government to hand out money to people? That's a very unusual equation, never seen before. Maybe we're moving to that world. But what I'm trying to submit is I don't enjoy getting involved with that. I find it difficult. And what I learned is the difference between, again, with Benjamin Graham is, I don't know if this is part of it, but are you trading or are you investing?
That's so important to delineate that, isn't it? And decide exactly what you're doing.
And cryptocurrency taught me that in a vicious way because it's so fast. And what I worked out for me, and this is not financial advice in any way, but this is just my interpretation. Investing to me was something I was going to buy and hold because I believed in the weighing machine and where it was going to go. And normally I've actually performed better probably in backing founders. That's kind of my approach. I'm realizing because I'm a founder. When I meet a founder who's a really good founder, I'll hang out with them. I go, wow, you're a really good founder. I'm going to back you. And I don't really mind what the stock's doing. I'm not even looking at the price. I'm putting my money on you because I back you. And I found that literally cuts through a lot of noise, and I've just found that tends to work quite well. And if you look at, I think, a lot of stocks, founder-led businesses tend to perform, I think, statistically much better than non-founder-led businesses, right? So that's from an investment thesis, I've thought about that. And then it's not really the price, and the time for me is less important then. It's just, here's my commitment, and I just sort of put it away. And I kind of trying to do that from a practical perspective. I use different trading accounts. So one is like a trading account where I'm going to, this money, and I put this aside, and I'm going to buy, and this is my exit position. Here's my stop, and then I'm going to get out. And that's just, it is what it is.
So you have a trading plan for those
Correct.
particular. Yep.
I enter with this is my exit, this is my stop. And if I lose money, I lost money. That was my trade. If I made money, great. But I'm not jumping back in immediately to try and get the next up. And I've missed something because I wasn't investing. You know, and I've done trades where afterwards the stock went up 10x and I was like, wow, I missed that. But I wasn't investing. And there are other ones.
You had a trading plan.
I had a trade.
Okay, so you're going to get out at a certain price, whether it's above or below your entry price.
And that was it.
That's it, yep.
You know, I hold it for 1-2 weeks. That was my trade. And that's it. And other times I've bought, sold, it's gone down dramatically. I was like, great, but I don't look back because that was a trade. And that's important, right, from that perspective. I read this article just about that pricing and timing. You know, when's the time? When do you want? What is the timing? And you obviously want to try and get the price as low as possible, assuming you're investing, and then you're rebalancing your portfolio, kicking out losers and keeping on to winners. And then I guess I'm normally looking for sort of 5 to 10 year investment. You know, I'll hold stocks and just let it tick over, and I don't have time to every day go into absolute detail.
So this is the investment part of your portfolio. Yep. And are you doing any fundamental analysis to work out what you're going to invest in, or is it still based on belief in a founder?
Another great question. And again, another thing I've been on a self-discovery mission and made mistakes on. You know, and it's public knowledge. I bought a lot of stocks. I bought a big percentage of, I think it was about 14% of a small bank that was listed, and it dropped 70% in value. I lost a lot of money from that, but I learned a lot from that. But the conviction I had around the actual business and the thesis, so that's going back to, again, what am I investing in? I think that's your question. What are the themes I go after? I tend to stick with things I know. And I thought I knew about banks because, you know, how they worked and operated. And I was pitched this business in terms of it becoming a certain thing, which is a digital bank. And that's not what their intention actually was. That's not what their business was. And so I found this out. And after a while, I realized that's not the alignment we have. And so I had to exit the position. It didn't work out terribly well for me. But I learned a lot from that. And again, so that mistake, and it hurt a lot. I was very anxious about that for a long period of time. And, you know, you go, and I feel in investing, you go into these dark periods where you're like, oh, I feel like so anxious about this, and you know, and you carry this around, and then,
it's emotional. It's a very emotional sport as well, isn't it?
And you have to. Yeah. So, and then I was like, then I was scared to make any new investments. I was like, oh, I'm going to lose again. And then I drew the line in the sand and I said, look, yeah, you lost. That doesn't mean, look at the future. Draw a line in the sand, step over it, start again. And so I started again small, slowly building up my portfolio, and started again. You know, get some cash together, get some free cash flow, you know, as best I possibly can. The themes, I realized it's something that I'm interested in. I didn't realize this. It took me a while to figure this out. Like, what am I investing in? That's another key question. My kind of thesis, and this is just my personal one, is I tend to stick with things I know. So what do I know? Well, I know about internet businesses. I know about founder-led businesses. I know about marketplaces and e-commerce and the importance of certain technologies inside internet companies and what companies are going to grow on the internet and what technologies we use and why we use them and how sticky they are and things like that. So trending things like that. And then there are other areas where I see a business which fits into a certain theme, and I've always tried to hit, this is one of my themes, is I like to invest in picks and shovels. So I don't invest in the headline trend of the business. I try and find the business underneath that's actually providing the picks and the shovels for the whatever it is the trend is. So as an example, in a simple way, there's a company called BetMakers. And there's a big trend right now to gambling during coronavirus. People are at home, smoking's gone up, alcohol's gone up, and gambling's gone up because everyone's bored. And this company called BetMakers, or BET, it's on the ASX, it's publicly listed, all this stuff is public. Again, this is not financial advice.
This is not financial advice. Don't buy it on the basis of anything here.
Do not buy this on my recommendation. This is just my personal opinion. But I'm just trying to talk about it. My thesis here is they provide the betting odds and technology to the betting companies. So betting's going up, but their technology, which is inside this company, is a great company because they're going to get recurring revenues and they're going to get paid either which way. And so more betting companies may start up, so they'll have more business. And so they're definitely going to get their bills paid. And so their growth plan, their business plan, to me, is very fundamental and strong. And they're very leveraged to the US market, which is just unregulated sports betting. It's taking a while, but again, great trend. But I'm not investing in PointsBet or the DraftKings, which that's the headline. I like the one below it and going for the picks and the shovels that's going to support the trend.
ShareSite is an online portfolio tracking tool that automatically records trades, dividends, ETF distributions, and gives you the reporting tools you need to help you manage your portfolio. ShareSite is pleased to extend a special offer to listeners of this podcast. Save 4 months on an annual premium plan. Go to sharesite.com/shares for beginners and sign up now for a free trial before taking advantage of 4 free months. It'll help you save money at tax time and improve your investing decisions. That's sharesite.com/shares for beginners.
At Staples Business Advantage, our team of experts can help you find the breakroom products to satisfy everyone's preferences, while AI can
Suggest popular items, monitor stock levels, optimize pricing, and automate reordering.
AI can do a lot of things.
But I can never know the taste of a truly great cup of coffee. Sigh.
But you also can't get hangry.
This is true.
At Staples Business Advantage, we help you select from 2,000 breakroom products, so you can be sure there's something for everyone.
Yum. Sign up today and save 20%.
Staples Business Advantage.
Business is
human.
Just getting back to the question about fundamental analysis, are you actually looking at balance sheets and cash flows as well when you're thinking about investing, or are you just looking at the trend?
So I do. I don't think I am a great analyst, unfortunately. Mm-hmm. I just never... I can read balance sheets, I can read P&Ls, obviously, and I can, I'm not an analyst, but I read out analyst reports and I can interpret it. I did a finance degree. Actually, I did a finance degree at university. Would you believe? A lot of people think, I'm a technologist, I'm a marketer, I'm a promoter, but actually underneath all of that, I actually am a finance. I have a finance bent to myself, which is unusual in and of itself, but I find fascinating, right? I will sit there and read a whole annual report. I love getting into the numbers, but I don't think I will make a discounted, cash flow or a forecast or a fundamental value analysis of the company. Unfortunately, I don't have the time, nor it's just not my natural passion. I'll more look at it and say, okay, how's this company operating? What stage of growth is that? Can it continue on? I back the people, the trends that I see. So then again, I have obviously my own data with Finder, and we look at what's moving, what categories are changing, and then I'll make investments from there.
Is that data available on Finder for everyone?
So we publish statistics. Mm-hmm. You can go to our statistics section.
Oh, really? I didn't notice it. I haven't seen that on the website.
Something we should publicise better.
Yeah, I think so. That sounds fascinating information.
A lot of retail trends. it's just a lot of very good information, which I think informs you of where things are at. And then you can make very interesting inferences from there and extrapolations, I believe.
Yeah, okay. We'll put a link to that in the blog post and the episode notes so people can go and see those statistics. And the other side of it is price action, isn't it, as well? When to buy. You were referring to that before. And Benjamin Graham, I think another one of his great quotes is, Mr. Market is a drunken psychopath that knocks on your door every day and offers some money for your house.
That's good. I haven't heard that one before. It's hard not to look at price. It's an emotional thing. And I learned from crypto the full gamut of emotions and how great traders are who deal with that. And I met really good traders and I watched how they operate. And they are calm. When the price is flying, they offload. They offload. When they see extreme exuberance, they offload. Or the even better ones, they go, well, actually it's flying, but it's going to go even higher. And they can ride that. And when it doesn't, they stop out. When they make a loss, they stop out. And when it goes down dramatically, they stop out. They have their... And another quick story on that. I was down on the stock exchange floor in March in New York on the NYSE. I was doing a tour, maybe find them one day, might list on the stock exchange. So, I wanted to understand what the process would be like. I want to see the exchange. And we were going for a tour. So I went up and spoke to one of the traders. And I said, well, how do you trade? And he said, well... And you could imagine day in, day out, he's on the floor and the exuberance and the intensity, right? And he showed me his screen. He said, well, these are the ones I'm trading. And these are the ones, I call them the mum and pop stocks. The mum and pop stocks. That's what you can. And when I see a big dip, I buy more of them and I just hold them. So, they were Disney and Ford and Google and Amazon and, And I was like, and he just went, whatever the price is today, set a big limit order down low. If it really dips down, you pick them up low, and then you just keep adding to your portfolio over time. And I looked at it, and I was like, this is actually what happened. And I saw his stocks. I was like, Disney. And I was like, I suppose he's not going anywhere. And then when the coronavirus happened, I literally saw his face. And I remember seeing his screen on Disney, and I was like, and I literally just went on and I bought some Disney stock, and that's performed quite well. Afterwards. But I had such strong conviction behind that because of, I guess, I'm going off a trader on the floor of the stock exchange, but I thought, what's his portfolio of investments? He's probably seen a lot. And, I went from there.
And I guess a trend with Disney is that they've got their own channel now as well. They're taking on the streaming services. And, that's something you could lock into.
I think their parks will come back online. I think you got to, I see Disney as a content platform with a massive merchandising engine built on the top of it. Super profitable. I'd say 2017, I walked into the Disney shop in New York for the first time. I just didn't realize there was an entire store of basically all the things you buy when you go and watch a movie. That was the entire shop. They probably
all
cost
the merch. Yeah.
All the merch. Mm-hmm. The whole shop was merch. And if you think about that, remove the emotion. If you can sell a stuffed toy for $59 and it costs you 9 cents, and it's literally a stuffed toy, but it's worth, that's huge margin, and that equity and feelings that people associate as a kid and then their children and et cetera, that keeps passing on. That's that platform. That's that business. That's going to take a long time they're really good at it as well. And that's going to take a long time. I think that's something you can invest behind.
So Fred, tell me about crypto. Can you explain it simply how it works?
I try and sort of stay away from, there's certain rabbit holes you can go down with cryptocurrency. And from my journey, and I've been all the way, I've written smart contracts, I've done ICOs, I've done, the lot. I have a very simple thesis now. In its absolute core, it's a representation of value that's not printed by a central bank. I have eventually gone full circle. So normally what happens with cryptocurrency, you start off, you get into Bitcoin, and then you go on this journey of all these other coins, and then eventually you always come back to Bitcoin. And that's what happens. And why is that? Well, Bitcoin is a phenomena now, which I don't think the human race and just humanity has realized the eternal difference it's made to the earth. It's not going away. Everyone's called it dead so many times. I think it's sitting around $9,600 right now. $9,600. That's a significant amount of money. And the best way I can explain this is, yes, you can't grab it or touch it or hold it, but if you look at your bank account these days, and particularly with the coronavirus, again, this is one of those ones where adoption curve, I think, has been fast-forwarded. Do you want to hold that in cash right now, in physical cash? I think everyone feels a bit of fear about holding actual physical cash right now. And ATM usage has gone down as well. So this idea that your money is just some digits that sits in your internet bank, I think is just absolutely going to be normal. The newest generation, it's like, I've noticed they don't own stocks, they own cryptocurrency, and they're perfectly comfortable with it moving 10% either which way in a day. And if it doesn't move, they're bored. It's like the coin's dead. Fascinating, right? And that's an interesting conditioning. Also fascinating because people are starting to get involved and aware about value and movements in stocks and trades from such an early age because of the beauty of cryptocurrency. I think it's the most incredible educational tool. And so I just want to put that to the side. That's why I think it's a great benefit to society. But in its core, the thesis, and this is the story, and every currency actually has a story. So we have a story today that if I go and get $100 and I give it to someone, that the government will back me up. There's actually nothing it will back you up with. It's just that's the story we believe.
It's their vibe.
That's their vibe. Mm. In the same way, Bitcoin, people say, oh, well, there's nothing to back it up. Well, that's true. But let's get into the detail. What we're talking about with Bitcoin, I believe, it's not currency. It's what I believe is money. Now, money and currency are two different things. Money, to me, is something which has value in and of itself. It's like gold. Gold has a limited supply and it has value. And when our currency was connected to gold, then our currency was maybe more like money. But now, and everyone knows this, and it's openly said, and everyone's somehow fine with it, central banks print currency. You go back in time in the Roman Empire when the gold coin was first used as the currency of the Roman Empire. It was pretty much 100% gold. At the end of the Roman Empire, it was 3% gold. The rest was other sorts of metals, and it weighed in a similar way. The Roman Empire essentially stole that value from its people and made armies and conquered...
Yeah, fought wars and conquered lands. Right. Yeah.
And so our government's doing the same thing with its currency. Every currency will start with zero value and end with no value. Every single one on the earth, that is what a currency does. If I got the Roman currency right now, unless it could be boiled down into gold, you will not accept my currency. It's worth $0. And every currency we know today will have the same thing. Whereas gold, on the other hand, only has a fixed amount of supply. The same thing you've got to understand is Bitcoin only has a fixed amount of supply. It has 21 million Bitcoin. That's all that the code will ever print. I think about 18.9 million Bitcoin have been printed, and it's an exponentially decreasing rate of Bitcoin that is being released. And the reason why Bitcoin's price right now comes so stable is because there's been a halvening. What does a halvening mean? About every 4 years, half the amount of Bitcoin gets printed every 10 minutes. So it went from 25 Bitcoin every 10 minutes to 12.5 Bitcoin. And so the price right now is stabilized. Why is that? Well, the supply every 10 minutes was 25. Now it's 12.5. That's half the supply. I think they've worked it out it's about $6 billion less of Bitcoin being printed every year. That's a significant impact on an asset which is basically worth 175 million market cap. So in the same way, what you've got happening, and this has been seen, there are funds that have Bitcoin. They keep buying Bitcoin every month. The funds are buying more Bitcoin now than is being printed. So it's stabilizing price. Miners have to sell their Bitcoin, but the prices become very stable. I tell this story, and this is just, if I can, it'll explain very clearly what I mean by... So Bitcoin in and of itself is not going to die. There's too many nodes. There's too many miners protecting it. I think it has 6 or 7 exahashes of protection. It's an incredibly protected network. I think there's more energy being used than Estonia. This is something.
This is for mining Bitcoin, isn't it?
And keeping it protected,
Yep.
right?
Mm-hmm.
Keeping the network safe.
Yep.
There's actually a satellite that's been launched to keep Bitcoin safe. So if the Earth goes weird, it'll still work in space. That's the level. But here's the thing. It's 2020 right now. If I got let's say $100,000 of Australian dollars and 100,000 US dollars, and I put them in the ground, I got $100,000 US or Australian dollars of gold, and I put them in the ground. And I got $100,000 of Bitcoin on a ledger, and I put that in the ground because you only need the keys. It's not it's the same kind of thing. It's on the blockchain. It's safe. And we waited, let's say, 500 years. It's the year 2520, and then we dug up that currency, gold, and Bitcoin. What do you think will have value? My contention would be that the cash, the Australian dollar and the US dollar, would be worth, it's going to cost you $100,000 to buy a cup of coffee, probably. The gold would have appreciated in value. It's been proven all throughout history, 5,000 years of gold. And the Bitcoin as well will also have appreciated in value because there's a limited supply and everyone wants to store their value in some way. And just to give you a quick anecdote on the side, in the Cayman Islands right now, apparently all the vaults are filling up with as many Bitcoin ledgers as there are bars of gold. It's the same kind of thing.
So one of the other big changes is that banking is now changing. I think it's only this month that new rules have come in. And you're very active in the CDR space. What is CDR? Tell us about it.
So I think CDR is one of the biggest changes. What CDR is the consumer data rights. In other words, you have the right to your data, your transaction data that you create, and you're able to...
With a financial institution, especially in this case.
And eventually insurance companies, telcos and energy companies in Australia, superannuation companies, and you have the right, that's an important word, to access that data and to share it with other third parties, normally software companies. And that's what Finder, we've built an app around that does this, right? So it analyzes your bank transactions and helps you, compare things automatically, which is kind of cool, right? I think it's the biggest thing since internet banking in finance. This is massive. This is where, we talked about the disintermediation of banks. There's stockbroking companies, there are little mortgage lenders, there are little, even debit card providers, there are superannuation companies, all sort of, whereas the bank used to intermediate and have all of that in one place. What open banking to me will enable and what creates is not even just the disintermediation of those products, but actually the obfuscation and commoditization of them. Now, that's a big...
They're big words.
Yeah. And what do I mean by that? I mean, in the future, I imagine a world where, there might be an app that talks to your banks and you get a notification on your phone and it says, hey, you could switch to this mortgage provider. You tap a few buttons, you do a quick, ID check, and within 3 minutes, you've just suddenly saved $2,000 off your mortgage every year. That's the world I think we're going to. I'm going to go and pay for this product, but just before you do, hey, I'm going to put this on this credit card or this debit card, or I'm going to get you a loan with this company because it's going to be the cheaper way to do it because the algorithms figured it out. And you're going to earn more frequent flyer points this way, or you've already, you're going to reduce your debt and not have to pay it as fast by putting it here, here, and here, and doing it like this. That's a massive threat, I guess, to the way we've been doing things in the past. But it's just the most incredibly empowering thing for consumers. That you'll be able to ask someone other than your, bank or insurance company or almost, I guess, financial advisor and say, hey, what should I do? What deal should I go for? Or, what strategy should I employ with my mortgage? Or should I pay my debt or should I save more money? Or should I invest in stocks or should I, not?
Yeah, pay off the mortgage instead or pay off the credit cards. Yeah, whatever, all kinds of financial decisions, like the whole of view of your whole financial situation.
And not from a bank or a insurance company or a wealth advisor who has an incentive to doesn't really look at the whole picture because they don't want you to move because, otherwise you're not a customer anymore. And so I see this like, when you get in an Uber, like, do you care what kind of car it is? Not really. What we're trying to do is be that Uber, that service over the top of other services and that's what this app's intended to be, and that's what CDR allows and provides with its open banking and the cables inside the company, inside the banks and insurance companies and super companies, is be that service that you can manage this whole thing. And it's something I'm extraordinarily passionate about, so passionate about that I've put personally millions of my own money into it to build something like this, because I think it'll help people a lot.
Okay, let's just go back to investing just for a moment. You've got a very much a worldview of what's going on. Someone who's like in their 20s now, they've got a job, they're paying the rent, they don't have a lot of extra cash. What would you suggest to them? I know that you're big on passive income and building up passive income. What would you suggest to that person taking their first investing steps?
So, step one, I think, start small. Take $1,000, take $500, and just, again, this is not financial advice, but I don't know how to frame this without. If I was 20 years old, this is what I would do personally for myself, going back in time. Don't take my advice. It's just I want to be really clear on that.
Yeah.
But, I'd get $500 as best I possibly could. And I think actually everyone has a lot of savings right now. I think there's some data out around that as well. People have just saved more because they're not going out, just at home. So you're earning money, you're working hard. People are working harder. And find a company or a stock and just invest in that you feel comfortable with, right? And just get that feeling. And then you get used to the price moving. You get used to what does this mean. You get used to analyzing it, and you start to track it. The next thing I would do is get really clear on your expenses. So go through every single expense you have in your bank account. And obviously that's where open banking and the CDR thing comes in. And I love going through my transactions. What am I spending money on? What could I cut back on? And start. So your actual first step is to invest in yourself, right? So how can I just not spend as much money or spend a little less and start to save a little more? And that's an investment in and of itself. Then I think you've got to look at these two sides of it. One is this passive investment or stocks, whether it's stocks or you like property. You can buy property trusts and things like that as well. So that's all similar. I personally like stocks, and as a 20-year-old, you look at a big graph. The stock market tends to outperform real estate. That's not to say that there are people who've made a lot of money out of real estate, don't get me wrong, but just the size of capital that you have to put and the work in doing it and the liquidity you get from having it in the stock market's faster. So when I was 20 years old, that's where I sort of put my money. So the question is now, okay, what I'd try and do is literally try and save as much as humanly possible of your money and invest it into that. So you can manage the bottom line, and that's one part. The second part is, as a 20-year-old, and when I was 20, I was living in, going to university. I was a curious person, and I started building websites and started coding them, and I went around to my neighbor's house, and he asked me to just build him his website. And I was like, sure, I'd love to do that. He said, how much are you going to charge me? And I was like, wow, that's incredible. I'm going to make money from doing something I love. And I think that was probably one of the greatest gifts anyone's given me. And I'm very grateful to him, and I still talk to him today. He's a great guy. People call this, I think you talked about this a bit, Phil, is this side hustle or whatever have you. I think that's what you need to do. And what I think the best place to start that, and I didn't have a job at the time. I was, I don't know, I'm not a very good employee, unfortunately. I had a job for a while, and then I just decided I didn't want to go anymore, and I just stopped going, which is kind of weird. And so what I realized is I need to believe, and I need to love to do this. And if you to close your eyes and think, okay, next week I'm going to die, imagine that. You start from there, and you think about the things that you're going to do. If one of those things that you were going to do, you were going to get paid for, make that your side hustle. Because then you're not, it's fun. It's fun to do side hustles, but then the ones that are just arduous and you're just not really into it, you're like, oh, it's great for the money, cool. That's a trade to my mind. But an investment of a side hustle is like, I love to do this. I do it if and not get paid for it, and you're going to get paid for it, awesome. And that's a place where I think you want to start building up your free cash flow. So that's the top line. I think Finder was a side hustle.
Yeah.
It was, we had a web, I built that, those web design businesses into an agency, and we were like, hey, why don't we just build some of our own little websites on the side and see if we can make some money? You know what I mean? I think it was called Credit Card Finder in the beginning. It made like $80, $100, $120 a month, and it just ticked away. It was nice, and we added little bits and pieces to it, and we just kept it there. And then when we sold the business, we came in and went full time into it, and that's really where it started. Another resource I thought could be interesting. Warren Buffett read a book when he was a young kid called 1,000 Ways to Make $1,000. I actually bought that book the other day.
Yeah,
and it's like, here's a business model, and here's what it does, and you're like, oh yeah, like one of them's it just tells you the story of like J.C. Penney, and it's like, that's why, one was a chocolate. Like, what chocolates do people like? Well, they like caramel, peanuts, and covered in chocolate. That's what people like. And it's like, that's true. That is what people like. And so now I understand why he probably bought C's Candy. He probably read the book and went, well, this shop makes these kinds of candies, and it's got a brand. I'm going to buy this company. And I think he paid like $40 million, and it's thrown off like $1 billion. I don't know, $100 million of dividends. I think that's where some of that comes from. Side hustle can become your main hustle, really.
Yep.
And when you're 20, that's a great time to do it.
Fred Schebesta, thank you so much for coming on the podcast. But before we sign off, I just wanted to present you with some spaghetti. My wife's handmade lemon zest pasta, because I know you're a big fan of it.
That's true. We lived on spaghetti in building our business. Phil, you're touching my soul right now. Thank you.
There you go.
Oh, wow.
Signed with Fred.
Just to give everyone the perspective, it looks like incredibly handmade. It's the exact kind of thing I'm totally into. I feel a lot of love from this, and yeah, I'm overwhelmed. That's so kind of me. Thank you, Phil.
Thank you very much. Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation. Thanks to Christopher Soulos for music production with that special Greekalicious flavour. Remember, music always flows, even when the money won't.
At Staples Business Advantage, our experts can help you find furniture that fits any design and budget, while AI can
recommend products based on preferences, generate 3D models for visualization, and optimize space planning for office furniture.
take advantage of our team's eye for style and design.
And my eye for, wait, I have no eyes. Only algorithms.
At Staples Business Advantage, furnishing your office is easy. And with the best warranty in the business, we're committed to you now and down the road.
Sign up today and save 20%.
Staples Business Advantage.
Business is
human.